Joining us for more on where the oil markets are headed amid the unrest in the Middle East, Bloomberg best analyst Jason Gammel is with us. He's with Macquarie, live from London. Jason, good to have you with us.
Good to be here, Betty.
So let me just get very basic first with you, Jason. What is the oil price as it stands now? What is it pricing in?
Well, essentially what we're looking at now is Brent crude pricing in something about $12 or so for premium that's associated with Libya. We're trading at about $100 Brent pricing based upon oil supply and demand fundamentals prior to the Libyan situation.
So it is just about Libya. Oil markets are not yet pricing in any further disruptions throughout the Middle East then?
I guess you're probably right. I should have really qualified that more as risk from interruptions in the Middle East, with Libya being the most immediate.
Okay. If we are seeing this, if we are going to see this escalate, Jason, and see it escalate for a longer period of time, where is oil headed?
Well, if we do see incremental interruptions, because Libya is already greatly biting into our spare capacity on the worldwide system, if we see incremental interruptions, then we believe we could see new record high oil prices. Last time oil peaked was about $148 a barrel. 148,
so we could surpass that then?
We certainly think it's possible, particularly, if you see the situation spill into Algeria, for instance. That would be a situation where you'd be basically taking all of the available spare capacity out of the worldwide system.
So describe to me the spare capacity. What is the spare capacity of Libya? How much do they contribute to that? And how much does Algeria contribute to that then?
So when we look at the how much production Libya and Algeria put into the system, it's about 2.7, 2.8 million barrels per day. The only spare capacity in the system, in other words, capacity that is not already up and running, is primarily, almost entirely, in Saudi Arabia. We think it's about 5 million barrels a day, but what's readily available is closer to 3 million barrels a day.
Okay.
So if you lose Algerian production and Libyan production, you can offset it, but that's about it.
You can offset that then. Okay, so then what is OPEC to do now?
Well, OPEC really doesn't have a lot of control over the situation. Saudi Arabia is the only one with the spare capacity. The Saudis would potentially respond, put their spare capacity onto the system. That would be everything that's in reserve. So any incremental interruption would be something that you would not be able to offset.
Okay, but at what point, because people are saying, what is Saudi Arabia going to do? What are the OPEC members to do? I think there's some emergency meeting that's happening next week with the International Energy Agency. What can the other oil producers do, though, if we do see, in fact, increased volatility in the oil markets beyond what we've seen this past few days?
The short answer is not much. The Saudis can put their production on stream. They're already starting to do that. The other step that can be taken, though, is that the IEA, who holds strategic inventories, can start to put those strategic inventories into the system and actually put, for instance, diesel and gasoline into the European supply. That's really the only other point of incremental supply that we have.
Then, Jason, over here in the U.S., if there is not much to be done in the Middle East, what can we do to stabilize the oil prices, if anything?
Well, one thing we could do is begin drilling in the Gulf of Mexico again. That would certainly help. There would be incremental short-term things that you could do to boost U.S. production. The U.S. also has a strategic inventory. That's something that you could draw upon. These are all steps that could be taken. I don't think they'll be taken given what we know today, but there's steps that can be taken down the road if the situation deteriorates.
Right, and the situation does change day by day. Jason, thank you. I appreciate you being with us to talk about the oil markets. Bloomberg best analyst Jason Gammel with Macquarie in London.